Hey, it's Matt with PriceActionTradingSystem.com. It's Wednesday, it's February 17th, and this will be our chart lesson for the day. And really, really good trading day. This is a strong trend. Um, I, I see a two-tiered channel working higher here, but this is really way too steep. You want more of a 45-degree angle for a healthy trend. And so at some point, you figure that we're going to start going sideways or level off a little bit, and that's kind of what happened here. Um, But whenever you see a lot of little bars, lots of dojis and little bars stacked up, and they just keep going higher and higher and higher like this, that is a strong trend. And when you recognize that, um, just take it. It never fails. People, we'll talk about how you don't want to go long right into the high of the day or the last swing high. But when you see a trend like this, you don't get a lot of pullbacks or corrections. So every time it pulls back to a key entry point, um, just like right here, you probably want to enter because that's the only chance you're going to get. So I'm going to go ahead and mark those. I'm going to make those green because they are just first entries. But in a strong trend like this, you just about have to enter them. So I'll mark them and we'll talk about them. But you can see I saw it several different ways. Early on, short term, it was a spike in channel right there. But of course, once you got your first major correction, you draw your trend line there. And if you draw it up to the high, we never got that high, but you can see the midline fit real well. We bounced off it a few times before we turned down. But as I said, this is way too steep, and there's another little short-term channel working in here. You get a break and new high. This one you got a break and a new high. Then we kind of corrected a little bit there. But we continue to just go higher all day. It really slowed down a lot right in here. And of course, this purple area here, um, that is during the just before and just after the FOMC announcement that we had at 1 o'clock today. It didn't really change anything. We got a little surge out of it right there, but we quickly came back and reset and just kind of went sideways for the day. So, and that's generally what will happen. You'll get a big push one way or another. But this was probably tradable. But I usually don't mark anything during that time because most of the time it is not tradable. It gets real crazy, but there was no surprises or anything really. Uh, and did somebody know, what was coming beforehand? But this was really, I mean, I've been waiting on a rally. We've been overdue for one, and that's the thing. When you get one, there, even in a strong bear market, when you get a rally day, they can be exceptionally strong days because people, once prices start going higher, all the people that have built up huge short positions have to start exiting to lock in their money, and it just fuels the fire. And so I've been expecting one of these to come. Wasn't expecting it really to come today because it was an FOMC day, and generally they're kind of quiet before the news. And then maybe you might get some fireworks after that, but it was all prior to the news today. So really good day. But let's back out, talk about the trades, and go from there. But again, just remember when you see lots of small bars like that with dojis that just keep going higher and higher and higher, that is a strong trend. And take every second entry and definitely take, well, let me back up there. Take every second entry that's off of uh, off of the trend line, and you can take most first entries if they're off the trend line. So just keep that in mind. But otherwise, you won't get many entries because the prices never back up very far. They never correct very far. The best ones will generally be when you get a day like this. It'll be the ones that are off the trend lines or off the EMA, and those generally are going to be good trades. So, but let's back out a little more so we can see this a little better, and we'll go through the trades. But today's the kind of day you hopefully have a really good day. I had probably one of my better days since the last one I had. This one wasn't quite as good as that one, but it was pretty good. So, but anyway, when I came in, we had this spike up here, and we were gone into this challenge. You can see right here we confirmed. Let me move this out of the way. We confirmed this, and you really could have entered There's really two chances to enter here. I probably should circle them both. Let me go back here. But we bounced off the trend line. We got a first entry. We pulled back. And you got a second entry right here. So there's a second entry long. We didn't make another correction, but that's still close enough that you could treat that. When this broke lower and turned back up, um, you can basically treat that like a failed, actually it's a failed second entry short is what I'm trying to say. Let me just cut to the chase. It's a first entry counting off the high, but it's the third touch of the trend line, and it's a failed second entry short. Notice this low right here, then you tried to go lower twice. It's a double test. It's confirmation. It broke higher right there. So you could enter right there as well. I didn't have that one circled originally. So you could enter, and notice it went lower first and turned and went back up out the other side. So I like that. And then you could add on here because now you get another attempt to go lower. Look how everything's closing right along that line. That's a great, I don't know why that thing keeps popping up like that. That's a great setup there, one you can add on. So you can get a double right there. And you could have got a couple of points out of the runners if you just exit right before this line. Just say you exit right before you hit that, it would have been right there probably. That's a little over 3 points right there. You get off that one, and then you double that, so it's 6 points. That's just assuming you had one runner on each one. That doesn't include what you made off your scalp. And then, of course, you're making U out. You pull back to the trend line. It's tempting to go long right there, and you really could have, but we overshot this right here. So I was a little leery of it, but we get a second entry right here, another chance to enter. And there's actually a failed second entry short right here. That one really should be marked as well by this time because you know it's a strong trend. I was considering it green really, so we'll make it green. But it's so border. It could actually be blue. I mean, it's real borderline. I'm gonna leave it green because we've had such a huge move and we hadn't had any real. And this one didn't quite get back to the trend line and the EMA, but it's a failed second entry short because this swing low is lower. This swing low is lower than that swing low, so the count starts over, and it's a failed second entry short. You go long right there. Okay, sorry interruption. So, but anyway, since it wasn't off the trend line or the EMA, there is a trap. I'm just going to leave it green, but it could be blue. It really could. And then of course you make another new high, pull back first entry, pull back second entry long right there. And yep, it's really close to those highs, but you can't worry about that at this point because you see every time it pulls back, it's going higher. So another nice second entry long, another nice easy move. And of course, I'd exit right up there around that upper line again. And you probably get another three or 4 points there. And then of course we get the correction here. We get a close outside, a new low. It's tempting to go long right there, but you don't have anything really telling you. I mean, there is some previous support across here, but this could go a little bit lower. You might get another leg. So we're not that far away from the EMA. We're probably going to have a retest, but I just don't. I think it's too risky there. It's not a real. It's a real small bar, so it's low risk. I tell you what, I'll make it green because there's probably some of you that like those trades because a lot of times if you catch these, you know, you get to ride the whole thing out. They definitely, by taking on that little more risk, you definitely usually get a better reward. But you get a second entry here, and it's not that much better entry or worse entry than this one, I should say. So you're only missing out on a couple of points by waiting on a more bullish bar. And so I like that one. And of course, this one, if you catch this one, you got a runner. And then of course you get the failed. Now you push through the EMA and you get the failed second entry short. It pretty much sets up the trend line. Go long right there. And again, it's taken off. I did mark these green because they're all first entries. But at this point, I would be looking, you want to measure the main leg. I didn't show you that, this main whole leg up from here to here. But you also want to measure this part, which is basically, oops. basically the first leg of the spiking channel, and then you look for a measured move from there, and you can see we actually overshot that a little bit before we got a big correction. So it's still showing the market's real strong. So then I'd be measuring the main leg. But these are all nice entries up through here. They're a little more aggressive because they're first entries. You're having to go long right into the high of the day. But when you notice what's going on here, and you notice this shorter term trend line in here, just have at it. I mean, that's you're not going to get any better than that. And you can see, even right here, the only reason I didn't mark this one green as well, it's right off the trend line, but I didn't mark it because it's not only right into that high, it's right into that one. And so you got a little bit more important resistance across there than when you're just heading higher. So I hope that makes sense. But and then we get a little break and a move here, and so now we're working lower. We're really kind of going sideways here, slightly down, but it's been so long since we came back to the EMA. You want to at least get back. You would want it to confirm this trend line right here, and it really doesn't. It pushes through it, so you get a break right there. But this is really one leg, a little two-legged down, then a little two-legged correction, and then another leg equal to that first leg. And you probably won't see that unless you're real experienced with what we're doing. Don't fret yourself over it, but there's two-leg swing there, and then there's a little correction, and then there's your what a measured move would be. And you see we went maybe a tick or so lower than that. But there's also, I don't have it on here, but I need to have that on there. There's your trend line, your close outside. Actually, that went a little steeper than what it should have. Your close outside, you move to a new low, and then right off the EMA, a nice little bounce right there. And so I like going long there. This one is right back into that resistance right there. I didn't like it. It really has what looks like a breakout pullback long, and there is a breakout pullback long here. But you've had a break here and a new high, so I'm a little bit leery of it. So we really need to establish something else. And then you got this correction. You get the close outside, a move to a new low. It bounces, and you get that reversal bar. It's a second entry long. Go long right there. Pulls back. This confirms that. This is another one where you get to add on and get some double up. But this confirms the trend line. Look how bullish that is, bouncing right off where you would expect it. I'm sorry, I had an interruption there, so I'm guessing. And we were talking about this trade. So that's your second entry, and then you get a chance to add on here. I really thought that would take off, but it did come back and test this line again. I guess people weren't 100% sure of it because it didn't really, it actually did match up here. That's where I originally had it. It could be there, but I tightened it up a little later, and it seems to fit better there. But so you get a chance to add on, and then you get to your a push through the MA and a pull back there, and another chance to add on. So that's a 3 times you can have. This was a really good trade. That's how I'm going to leave it. And look at that move, how far it moved. And there's a trend line here too that you could have used to kind of keep you in this trade. And you don't get your first close outside till here. So if you just exited when you get your first close outside in the bar, and you get a tick lower than that. So let's just see. We'll just say from the highest trade to there. That's three points. So it's at least another point from the other couple of spots there. So that's 3. If you add the runners on too, that's 3 points times 3. That's 9 points on just single runners, by adding on. And you don't want to, let me back up because I don't want to give anybody any crazy ideas. You don't want to be adding on unless you are very skilled at reading the price action and you're confident you're reading it properly, because if you load up on 3 and get a loser, you're in trouble. But, we see these good setups all the time where they're just, they're almost sure things. And on a day like today where everything just keeps going higher and higher and higher, it's pretty much a sure thing. You're at least probably coming back up to test these highs here. But this thing just pushes right on through. So that was a great setup. And then of course we went flat here. You don't want to enter in this that last hour. Um, I mean, there is a second entry right here that would have gotten you another scalp, and that was right before the 12 o'clock hour. So you might enter there. I'm going to go ahead and mark that one because it still kind of falls within our rules of what we'll do. And you actually could have added on to that one too. So it's still right. It's right, getting right into 12. So I don't know if I would add on to one there, but you definitely got an entry right there. And if you draw your trend line, the correction line here, you see you do get a close outside and a new low. So all the more reason you might. And that's definitely, 10 or 15 minutes before noon. But you see how it starts getting really quiet. We did sell off and come back down to here and bounce. But this is right at the 1 o'clock hour. So I didn't mark anything in there. And it really didn't slow down. I mean, this all moved in about 15 minutes. So it's not really super wild like it normally can be. So, I mean, really, you could almost trade that if you wanted to, but it's just sometimes it's not wise because you never know what might happen. But you're better off just to stay out during that time. So that's all I'm gonna say. But then notice you're coming back down. I did circle this short here. This has been such a strong day, but notice where we just came off the upper side. So we're probably headed back to the lower trend line, and you do get a trap here. Notice you're pulling back first entry, pull back second entry. You get that failed second entry long. And look how bullish that was looking. I guarantee you people were adding on, jumping in right here at the very high, thinking it's going to take off again because they don't know what's going on. And look what happens when it fails. That's how you know it was a trap, a good trap, because look how it rockets straight down. Look how big that bar is. They trapped a lot of people. And that's a quick, easy move back down to the other line. So and that pretty much wrapped it up for today. That got you into 2 o'clock. So really good trading. I got several notes about how easy it was today and what a good trading day. And that's, that's the thing. When you get a strong trend like this, as long as you don't counter trend trade, you almost can't go wrong. And I mean, look, if you'd have bought anywhere today except maybe here, and really there's no buy up here. There's not a buy. The first chance you get to a break above another bar is right here. So that one doesn't even kill you. As long as you didn't buy the double top, even if you bought that, you had enough to scalp out. So there's nowhere in here that you could have bought. Maybe this second entry right here, if you didn't recognize what was going on, you saw the break and new high, you might could have gotten burned right there. But any other rest of these, if you just bought all day long, once the pullback was over, and it's pretty obvious when it's over every time, you couldn't hardly go wrong. It's almost impossible to lose if you don't counter trend trade. So that's why when you get a day like this, take advantage of it and don't counter trend trade. So not much else I can say about it, but a really good day. But somebody else asked me today about a bar, and they were worried about bars like here's a bar that they were asking about down bars. But notice how that bar, there's no stem on either side. What that means is this bar opened on its very low and closed on its very high. What does that tell you? That means that's a very bullish bar. That's all buying for the most part. Now here's one where it closes on its very high, which is still bullish, but notice it opened here and it traded down and then traded all the way back up. That's like a revert, it's like a bar. It takes a lot of buying to sell off and then come back. Here's one where it traded down. Everything was bearish coming here, and it opened right here and it traded down to here looking real bearish, and suddenly all the buying come in and it buys all the way back up and it closes on its very high. That's strong buying. That means a lot of buying came in there to that. So I hope that makes sense. If you don't understand, the reason we use Japanese candles is just simply because they're visual. You can glance at these bars and you can tell instantly where it opened, closed, and you can tell where the stems are, and it's very easy and visual, because price action trading, when you're trading a chart, it's all visual. So the visual portion is very, very important. And these bars just make it easy to glance and know exactly what happened with that bar. If you're using regular open, high, low, and close bars, it's not so obvious. You have to study each bar slightly, where these you can just look at them visually at a glance. So that's why we use them. We don't use any Japanese trading rules or anything like that, so don't get hung up on that. But you do need to understand how and what, how to read a Japanese candlestick bar. So Google that if you don't, and it's real simple. It's nothing crazy about it, but evidently this particular trader just wasn't quite sure. They were asking me something about them, closing on their highs and lows, and I think they were a little concerned about that. But if you understand what we're doing, you understand that just makes the bar that much more bullish if it closes on its low and or opens on its low and closes on its high. And if it's coming down, if it opens on its very high and closes on its very low, then that's pretty bearish. Here's one. This bar, and this is a good example. This is a huge bearish bar. It opened here and it was trading higher. It touched the EMA and it just sold off like a rocket all the way down and closed on its very low. That's a very, very bearish bar. But hopefully you know better than to go short right there, because it's so far away from the EMA. It's such a huge bar, and it's right into that previous support area right across there, and it's an up day on top of that. Plus you have a break here, and you're already made a new low. But notice what happened here. There was a pullback first entry, pullback. There was a second entry long that failed right there and turned down. So if you'd have taken that trap, the short would have been right here. That's where you would have wanted to enter, and that was an easy scalp, because that trap pushed it down real. And all this is probably a bunch of these longs that got in right here exiting, and once they're all gone and the buying comes back in, it's off to the races again. It really never took off strongly, but it still bounced pretty strongly right there, because once it started going higher, all the shorts had to exit. So hopefully that makes sense there. But that's what a trap does. It trapped people there. When it turned down, they all got to exit. And that's why that bar is so big and so bearish and close. But you don't want to be going short at the end of a huge bar like that far away from the EMA, because this is what happens to you. It suddenly reverses and goes back. Your entry was way up here. And it was an easy trade if you entered in the right place. So. But anyway, that's enough for today. I'm going to wrap it up. We'll be back again to do it tomorrow. This is Matt with PriceActionTradingSystem.com, and we'll see you next time.